Hey guys, and welcome to the Working Money channel. Guys, you realize this crypto thing is very, very different than any kind of, new emerging market that we have seen in the past. Retail versus institution. XRP Drops here posted this, the dot-com bubble versus cryptocurrencies as a new asset class. Okay, this is a clip of Brad Garlinghouse from back in 2018. Guys, this is why you and I were at the forefront of this. If you have invested in cryptos, we are already ahead of the game. And I also think this is why regulators are having a very, very hard time. I'm going to explain after the clip. Listen to this.
The thing that's very different, and I've been out in Silicon Valley for about 20 years, the thing that's very different about what's happening now versus the dot-com bubble is the dot-com bubble, it was the institutional investors who were in, and then retail came on top and priced things up. The exact opposite has happened here. You have retail and kind of speculative interest already in the market, and now you have institutional money starting to come in.
So great clip here posted by XRP Drops. You got to remember, we are experiencing the reverse of what usually happens, guys. And this is why getting into the cryptos now, before the majority of institutions have gotten in, this is going to give retail a leg up. So the dot-com bubble, that was when everybody was buying up dot-coms, when the internet started to become popular and people were realizing, companies are probably going to want these domain names. So, institutions started getting in on that craze and then retail piled on top. But guys, this is flipped on its head. Retail is already by and large in cryptocurrency, to the capacity that we are. And then institutions are going to come in and then even more retail is going to come on top. So it's going to be like an institutional sandwich with retail bread, I guess. It's a stupid analogy. Anyway, XRP right now trading at 47.3. And, to my point, we are still seeing market relatively low. The big money's just starting to come in, but it's not really, causing any major moves. Bitcoin right now is trading just under 30,600 per coin. You can see the Bitcoin trend here. Bitcoin trend looking very stable. You can actually see it better on the 4 hour. Let me throw that on the 4 hour for you guys. We did see that pump up back in late June. And then Bitcoin hit this peak up here of about $31,400. And it's just been kind of hovering, trading sideways since about June the 22nd or so. 22nd, 23rd, give or take. So guys, this is all positive news. Michael Branch posting this, even though the percentage of traditional hedge funds investing in crypto declined from 37% to 29% in 2023. Confidence in the value proposition and long-term sustainability of crypto assets appears robust. Now, this was so this is from the block, but ultimately this is a survey, a new report that was done by PricewaterhouseCoopers, and they just released their report yesterday. Traditional hedge funds with current crypto investments plan to either maintain or increase exposure. So, let's go back to the Bitcoin chart here. And even just looking at, let's look at the total crypto market because this will give us a better idea. I mean, the charts look very similar. We saw that decline in 2022. Nobody was really talking about or getting excited about crypto. And they say that even in 2023, investment is down by only by a few points, by about 8%. Nevertheless, they are saying that confidence in the value proposition is up. Over the last year, the average allocation to crypto by traditional hedge funds increased from 4% to 7%. Still, slightly over half of all traditional funds surveyed said they are unlikely to invest in crypto over the next 3 years, so they are still a little apprehensive. Traditional hedge funds appear committed to crypto despite market volatility, a fall in digital asset prices, and the collapse of a number of crypto businesses. Investments in crypto assets is expected to remain strong, though, in 2023. This coming from John Garvey, a global financial services leader at PwC US. He said in a statement, traditional hedge funds committed to the market in the longer term are not only increasing their crypto assets under management, but also maintaining, if not increasing, the amount of capital deployed in the ecosystem. Now, going back to that last comment I said about how they are not going to really invest in crypto over the next 3 years, that is probably because they are not seeing any kind of meaningful regulatory clarity occur until 3 years down the road, so they do not want to take the risk. So maybe that gives us an idea of how long the final regulation is going to take to get hammered out. But the companies with foresight are saying, okay, it's 2023. I'm committed to the longer market terms, longer market moves. And they're not only increasing their crypto assets under management, but also maintaining the amount of capital deployed in the ecosystem. Guys, this is all positive news for you and I. Considering you and I are in cryptocurrency and considering you and I are investing in those assets that we feel are going to make profit down the road. If you guys are interested, I'm going to mention it again. You can follow me on my Patreon, patreon.com/workingmoneychannel. And there, I'm going to be posting my trades. I'm really close to getting into another position. I was kind of waiting for the coin to settle down a bit. So I'm going to be doing that very soon, guys. It's almost, it's pretty close to where I want it to be in that supply zone where I want to buy some up. And it will likely be the biggest position for that particular portfolio, the 10 to 15 coins that I'm diversifying in this time around. So if that's something you're interested in, patreon.com/workingmoneychannel, only $5 a month. So great news here from the block. Great news here from Michael. Wanted to thank him for posting that. Also happen to see this, guys, from XRP drops another one. Drivers for CBDCs, okay? A timeline. It's almost like we should have kind of known what was coming down the pike. I mean, at least for those of us who've been in this business for a while. 2009, Bitcoin launched and it was retail focused. Then we move all the way up to 2015. JP Koning's blog came out about FedCoin. 2016, CBDC conference in Frankfurt. 2018, first reports of Facebook planning a permissioned blockchain. And again, in 2018, central banks started to experiment with the new technology. Then come 2020, the beer flu, the shutdowns, and China was the first major economy to test a central bank digital currency. 2021, the Atlantic Council's Geoeconomic Center launched a CBDC tracker. And then by 2022, we have the Ukraine crisis and the disconnection from countries out of the global SWIFT network. It's almost as if it were planned, right?
It's really good to remind everybody that it started with a blog from the Koning in 2015 around a Fed coin. And a central bank in the US read it and suddenly told all the other central bankers they were meeting the next year on a conference in Frankfurt. And you started to see this interest of CBDC in the very early stages against the backdrop of Bitcoin and increasingly other cryptocurrencies. But then, of course, we had Libra, which everybody got a bit nervous about from a central bank perspective, which was another driver to say we need to make sure that we don't lose control of monetary policy. I did my own PhD research in 2017 on this topic, and you start to see in 2018 a frenzy of central banks thinking we need to experiment with the technology, which was very wise because it was new technology on distributed ledger. People had to start getting their head around it. And then, of course, you had China with their very large pilot that has now been going on for many years around their CBDC. So the context started many years ago more on the retail side for money that you and me spend in shops. But increasingly now in the last few years, particularly through the Ukraine crisis, as well as the countries being disconnected from the global SWIFT network, geopolitical drivers have made the wholesale space a lot more appealing. So the Atlantic Council has got an overview, and we had Josh on the panel with us today, that basically starts to see much more interest now from countries to think about a wholesale CBDC, how they can run their markets outside the US dollar hegemony, but also outside some other threats. So if they get disconnected from any system, they can still run their currencies, and they're starting to build alliances with other countries around them for certain trade corridors as well.
So connecting the dots here a little bit, and I had already gone over this, but I will link this in the description of the video for you. It's interesting how, that chain of events has occurred. Drivers for the CBDC timeline. I mean, if you guys believe in the conspiracies, well, you're probably not surprised about a few of these pivotal milestones, I'll put in quotes, that are on this list here. Anyway, wanted to thank XRP Drops for that big find. I thought that was great. I mean, the rest of the world is working on their crypto adoption. Central bank digital currencies is only one part of that. And despite the opinions of American crypto investors of Gary Gensler, it doesn't sound like he's planning to step down anytime soon, unfortunately. This coming from Eleanor Turret here on Twitter. So Gary Gensler will not recuse himself from crypto cases despite appearances of bias. At first I thought this article was about him stepping down in general, but he is being fully compliant and he's well aware of his ethical responsibilities. This is what he said at a press conference on Wednesday. There are multiple high-profile lawsuits the SEC is carrying out, the biggest names in crypto, including Binance, Coinbase, and Ripple. The chairman may be responding to the Blockchain Association's open letter that was circulating in late June, calling on Gensler to step back from anything relating to digital assets, but he's saying no. So guys, unfortunately, it's looking as though we've got more Gary Gensler in the future. Additionally, the association alleged the SEC has failed under the leadership of Gary Gensler, claiming that he has shown clear bias against the crypto space. Gensler's on the record saying the world doesn't need more digital currency. He has also repeatedly said that he believes most crypto tokens are securities. So it looks as though he is not budging with his, with his opinions, I guess, of the crypto space and the crypto environment. Of course, some do think that he has been paid off to do what he's been doing. The whole ETHgate thing is just one big glaring example of that. Wanted to thank Eleanor Turret for posting that. Apparently, too, we've got another attorney for Ripple who is withdrawing. This one from the ISO Goat here on Twitter. Anna R. Gressel of the law firm Debevoise and Plimpton has requested a leave to withdraw her appearance as attorney for the record in the above captioned action. Withdrawal is sought as Miss Gressel will not be associated with Debevoise and Plimpton LLP effective as of July 12th, 2023, which was yesterday. So she is now stepping down from the Ripple case. Another lawyer that has come and gone. But again, this has nothing to do with, the case or any kind of conflict of interest. It's just, lawyers tend to move around from these law firms. So just another piece of news here. Thanks to the ISO Goat for posting that. I mean, when it comes to Ripple news and the SEC lawsuit, it's good to see that the crypto community, the US crypto community in particular, is supporting Ripple and their lawyers. Weezy at Nerd Nation Unboxed posted this. Ripple CLO, apparently considered one of the most important crypto lawyers in 2023. And guys, this is coming from Messari. Okay, and Messari, for those of you guys who do not remember, who may not have been around for as long as some of us have, these guys used to be very critical of Ripple, very negative on Ripple. But I gotta say, Ryan Selkis has really turned a 180 and is he's one of the few, I think, he's not one of these Bitcoin maxis that have their head up their butts. He's one of the few that I think really gets the, negative impact, the ramifications that, the Ripple lawsuit could have on the crypto space in the US specifically. So Ryan Selkis, the CEO of Messari, he said this about Stuart Alderati in his analysis. Selkis emphasized the profound impact of the legal battle between Ripple and the SEC on non-Bitcoin digital assets and their trading within the US. Hinting at the impending ruling in the SEC suit, Selkis mentioned the significance of Stuart Alderati, the chief legal officer at Ripple, recognizing him as one of the most influential lawyers in crypto. With the legal battle poised to shape the future of the crypto industry, Selkis underscored Alderati's role as a key figure in the ongoing lawsuits of 2023. And here's a quote, guys. If 2023 is the year crypto sued the government, then Stuart Alderati is the most important lawyer not named. Messari CEO further said that the Ripple SEC lawsuit outcome will shape non-Bitcoin digital asset trading in the US, ruling imminent. So he's saying as soon as we get that verdict, the case, that's going to affect non-Bitcoin trading. So all the other altcoins, guys, which is, let's bring up the total to market cap, which is basically every single altcoin excluding Bitcoin. And right now, we are seeing the market at about, of all altcoins, at about $560.893 billion. So Bitcoin does make up about half of that market. Nevertheless, there's still a lot of coins out there that could be impacted. And, Ryan Selkis is saying Stuart Alderati, one of the most important lawyers, not named Paul Grewal here, considering what he's done for the Ripple lawsuit. So some good encouraging news there. Wanted to thank Weezy for posting that. We also got this, guys, the Lummis Gillibrand Crypto Bill 2.0 has been revamped. And not entirely sure if these puppets have our best interest at heart. So this means there is now significant crypto regulation in both the House and the Senate. Sources tell me neither have a chance of passing this year. So again, that broader outlook, why, I was talking about in this Price Waterhouse Cooper report, how they said, slightly over half of traditional funds surveyed said they are unlikely to invest in crypto over the next 3 years, probably because of this, okay? Regulation is happening very, very slowly, similar to molasses, moving slowly, regulatory clarity. Boy, I didn't think it would be this slow, Bearable Guy, but no chance of passing this year. When will it pass? Last year's prominent U.S. crypto legislation from a bipartisan pair of senators is back for a reboot. And so here's what we got, guys. We do have a relaunch. This would require that crypto exchanges be overseen by the Commodities Futures Trading Commission. So that was a big part of this. And all stablecoin issuers be regulated depository institutions. So going after the exchanges specifically and the stable coins particularly. The crypto industry needs the U.S. Senate if it's going to get U.S. regulation, and this bill represents the widest reaching effort to yet emerge from that body. Last year's inaugural bill from the bipartisan duo failed to make significant progress, and the wishes of key figures such as Senator Sherrod Brown, the chairman of the Senate Banking Committee, remain murky this year. So they revamped the bill, which, I guess is good because eventually we're going to need some kind of framework here. The bill's big ticket item, though, is the border it draws between securities oversights and everything else. The long-awaited division that would give the SEC and the CFTC their crypto marching orders. Broadly, it says that assets that don't give the investor a financial interest in a business shouldn't be considered securities, even if they benefit from entrepreneurial and managerial efforts that determine the value of the assets. Those issuing cryptocurrency would make twice yearly disclosures to the SEC, but as long as their tokens don't represent debt or equity or tick other ownership boxes, you'd stay outside SEC reach unless the agency wins a court challenge, also outlined in the bill. The bigger points, though, that I wanted to mention here, stable coins, of course, that was always kind of in the purview of regulators, realizing that us as traders, we can trade in and out of stable coins, boom, like that. And we can, move those stable coins around, and then we can trade them one-to-one to, whatever fiat they are pegged to. In a lot of cases, it's the US dollar, if you're using USDT or USDC or BUSD or, whatever US pegged stablecoin there is. I believe the US dollar is probably the most popular pegged fiat to stablecoin pairing. But also the exchanges, right? The on and off ramps is what these regulators are seeing as a pain point. If you can get your money on and can get your money off and there's no problem, well, they're going to have a hard time regulating crypto trading. But if you cannot do that, well, that bodes well for them, right? Not so much for you, but that's exactly what they want. They want you to be taxed. They want you to be scrutinized every time you onboard and offboard money from a crypto exchange. So this is why they're going after that. Anyway, just another update there. Wanted to thank Eleanor Turret for posting that. Also happened to see this too, guys, from Michael Branch. And so before, it's not going to take 3 years to get a Ripple SEC verdict. At least I'm hoping it's not going to take 4 years. I'm kidding around. It's not going to take 4 years, guys. We are going to get a Ripple verdict sooner than that. Michael Branch posting this: the native token of the XRP ledger, XRP, could see significant price increase to potentially reach a bullish target of, guess how much, guys? $30 per coin in the short term, according to the founder and manager of Crowlow Capital. So who is this guy? And how legit is this, okay? Crowlow's words come at a time in which a major player in the XRP space, Ripple, is locked in a legal battle with the SEC, as we know. The fund manager suggested that Ripple's advances in the case could further fuel speculation and drive XRP's price higher in the coming 3 to 4 months. Now, I've heard of people say perhaps a $10 XRP, certainly above all-time high, maybe $5. But this guy is suggesting a $30 XRP. Within the next 4 months, Crowlow sees potential for XRP's price to hit anywhere between $10 to $30. So he's giving a bit of a range there, fueled by the immense speculative narratives surrounding Ripple. Now, I gotta say, what he's got in his corner is the institutional money, all those wallets that I've been talking about over the last several months now that have been accumulating XRP and large quantities of it, okay? Those wallets, the ones holding, I think it was anywhere between, 1 and 100 million XRP. So we got to remember those are likely the institutional players. Those ones have been consistently, okay, guys, consistently accumulating XRP since, I think it's been since January. So essentially since the bull run commenced in general. So during this period here, this is why likely we've been seeing this steady incline, although it really hasn't had an impact on XRP price yet. So we got to remember, if these people are holding this type of XRP and their wallets already hold anywhere between 1 million to 100 million XRP, you got to think of the types of quantities. They're not buying, 500 XRP here or 1,000 XRP there. They are likely buying hundreds of thousands of XRP. So you got to think of where the supply is going to be, and then couple that with the demand, the FOMO, the one cryptocurrency that everybody's eyeing at this point in time, the entire crypto space, right? The $1.14 trillion market is looking at XRP specifically. So once we do get that verdict, everybody's going to participate. Whether you're already holding XRP and the price goes up, you're going to be selling. But then everybody who doesn't feel like they have enough XRP, they're going to be buying at higher prices, which could in fact fuel the price to go even higher. So his prediction is in line with those of other analysts, including a popular crypto market commentator recently revealing an ambitious XRP price of $10 per token. Crowlow noted that XRP's rally could be boosted by a potential Ripple IPO and a favorable outcome for the fintech firm in its battle against the SEC. So that's the other thing. If Ripple, decides on the heels of the verdict to announce an IPO, that would just, fuel the speculation even further. And I mean, the sky is the limit at that point in time. So I wanted to look into Thomas Crowlow just real quickly here. He does online education for trading and trading specifically. But the thing I noticed here is that he's CPD certified, which you don't see that too much. So he has accreditation in his industry, and he deals with all the things surrounding trading. I prepare my students to face the brutal realities of the financial markets, the fact that there is no simple pattern. And to be honest, guys, I've been trading myself for 11 years, and I've come across all kinds of different people who say they're experts or whatever, this, that, and the other. This is one of those websites, where you want to hear this kind of stuff because this is the reality of trading. Once you master the skill of explaining the market, you will be free to trade any structure of any market on any given day. The fact of the matter is, the more and more you look at charts, the better you will get at it. And, this guy is CPD certified. He is saying an XRP price of anywhere between $10 to $30. And even just taking a look at the XRP chart right now, I know typically we throw a Fibonacci on the chart and we usually line up the top here to the bottom of the trough. Let me just show you guys one example of what happened to Binance and why I got out at almost all-time high of my Binance position. This is one of my favorite trades, I gotta say. Made a lot of money on this one. Throwing the Fibonacci here, as you guys can see, only brought us up to here in 2019. As you guys can see, the trend actually went a lot higher. So how I ended up calculating this is I brought up the 0.236 to the top, and even from there, this was the top of the last bull market. Even from there, we can see Binance Coin did outperform. When you take it from here, guys, and you bring it down to this most recent crash here, okay, so this was an unusual anomaly for Binance Coin, and Binance Coin did, at least at that time, trade a little differently than the rest of the crypto market. You bring it here to the 0.236 down to the trough. Look at where the top lines up with, perfectly with the 4.236. So, I mean, if Thomas Crowlow's calculations are correct, and let's say we do, in fact, bring that same Fibonacci on the XRP chart to the 0.236 lining up with the top of the last run, April 2021, when XRP went up to almost $2 per coin. Where would the 4.236 lead us to, guys? Almost, roughly, $30 per coin. So is this a possibility, $10 to $30 in a FOMO run? It certainly is an interesting prospect to ponder. And I also have a feeling that we might get there too with this new pick I'm eyeing for my patrons, guys. Only $5 a month. You can follow my trading journey, patreon.com/workingmoneychannel. Also remember, if you do join the Patreon, you will get charged today and on the first of every month after that. Let's make some big money this time around, guys. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.